Good day, guys. How are we all doing? I hope we're all good. Wishing you all a Merry Christmas and looking forward to a very prosperous 2025. So, without wasting much of your time, we're just going to take a quick look at today's setup. I know most people are not trading since it's the holidays, but for some of us who are addicted to the charts, and for some of us who are back testing, we spotted an opportunity in the morning and we discussed about it, or we discussed it a little bit. Excuse my English. We discussed it a little bit in the morning and we eventually took a trade during New York session today. So it was a quick scalp, like all trades, we're taking as scalps. So let me take you through what we were looking at. And yeah, we're also going to be explaining market structure shift. So basically the setup which we had, it was just like a market structure shift plus confluence. So we're just going to jump to the results. And so I'm just going to start with the second slide. So you can see this is what we were looking at in the morning. So before I explain it, let me talk about this. So you can see this is the same chart. I saw this early in the morning today. You can see this was shared at 8 in the morning. So we're looking at US30. We're looking for a continuation of price to push up, which is the bias we had for the day. So if you've got a buying bias, what you want to see is price push to the bottom side or to the low side, retests a support zone, retest a demand zone, retest an order block, take out liquidity, any of those confluences. If they happen, then you can execute your trade. Of course, this is for day trading. For those who like trade London and New York session. For swing traders, it's a bit different in terms of timing, but otherwise the concept of the setups is still the same. So I had a point of interest on the H1 with the last OB before Tuesday close. And I also had a point of interest on Tuesday's London highs. So since we've got low volume, since it's a holiday, I was like, okay, the setup might happen today, it might happen tomorrow, but that's what we're looking forward to. So let me jump to the charts. Let's see how it played out. So, excuse me. Okay, let me just come back here, see if I can explain something quickly. Okay, I'll just come back to this later. All right, so this is how it eventually played out. So the first thing I'm going to talk about is the H1OB. Or maybe somebody might say what gave us the buying bias. So if you look at this, we want to firstly explain market structure. So basically, like I said, this video the only thing I want to explain on this session is market structure, shift, and confluences, how to come up with a setup using those two. So basically what a market structure shift is, it refers to a change in overall trend or behavior of price movement in the financial market. So us as traders, we often use this concept to identify when a market transitions from one phase to another, such as from bullish to bearish or vice versa. Recognizing this market structure shift is critical for adjusting your strategies and aligning with the prevailing trend. So again, I'm just going to try to keep it simple. So what is a market structure? Market structure is basically this, where your market is turning. Wherever the market turns, you want to just mark that area. Wherever the market turns, you want to mark that area. Then we wait for a setup, right? So just using data from last week, the past 5 days from last week, which is this Monday, Tuesday, Wednesday, Thursday, Friday. Then this is Monday, Tuesday this week. This gap here is Christmas Day, and this is today, Thursday. This will be tomorrow, Friday. So this is the H1 chart. Looking at this market structure, you can see that price was coming down, right? We've got a high here, just starting from there. We've got a lower high here. So we've got a lower low here. We've got a lower high here. Price drops again, creates a lower low. another lower high here, another lower lower here. At this point, when we get this break, this is where the market's structure changes. This is what we call a market structure shift. So after you see a market structure shift, what you want to look for is, like I said, you want to look for uh anything you know or anything you recognize. So we start with, is there any support zone which you can see? Is price broken any resistance zone which can be a support? So you might wanna maybe use this level there. So how you draw these levels, it also differs from individual to individual. You can use the wicks, you can use the candlestick bodies. It's all the same as long as you know the zone you're working with. All right. So after this level was broken, that was our support zone. So initially this was resistance. Then soon as it got broken, if price is coming down to it, it becomes support. What else do we have? We also have this zone or this order block, which was also broken, which is this candle here. So these are confluences. What else do we have? We also have an imbalance between these two candles, this one and this one. So this gap in here, that's the imbalance or favorable gap. So these are confluences. Confluences are what you need to actually formulate a high probability setup. So these are just the things which line up for you to actually tick. And once you have like two, three, or four confluences, you can actually execute your trade. So somebody might be asking, what is a confluence? Confluence is basically an alignment or combination of multiple factors, signals, or tools that confirm a potential trading opportunity. The idea is that when several technical or fundamental elements point to the same direction, the probability of a successful trade increases. So these are the confluences I'm talking about. So as soon as the market structure shifts, we start looking for buys, right? So we look for confluences, price eventually pushed down. It found the imbalance here, and we had an order block here for more added confluence, which was broken. So you can also attempt to enter with the buy stop here. But anyways, this is not today's setup. Today's setup was here. So if you notice this market structure shift on the H1, it's the same thing I'm going to explain when I go to a smaller time frame. So if you've got a bias, like today, we've got a buying bias. What did we have to the left? We had this H1 order block here. So you see, I just put a red line. So it just defines this whole zone here. I also had this level, which was Monday's open price. So you see, I put a red line there. Then I was also paying attention to Tuesday's London highs. So let me actually switch to trading view. So that I can show you guys the sessions. It's much easier to explain with the sessions on. Okay, we come to each one. Okay, I'm just going to delete these items. I'll put them back on just now as I explained. So you can see the points of interest I had, right? So today I'm not really talking about the moving averages. Please pardon me, guys. But anyways, we had the H1 order block, right? Which is this one. The H1 order block is also in line with this week's open price, which is also in line with this level here. You can see that same level, or rather Monday's highs. It's also a zone in its own respect. And we also had this demand zone where this explosive move happened just before Christmas Day. Right, I've got a bias and I'm looking for confluences. H1OB, this level, then maybe I can put the moving averages in just for added confluence. So what happened is price came into my order block at London during London session, right? Price trickles into my order block. Then from here, I'm now actively looking for a setup. So as I start to see price rejecting this area, I know that this zone is hot. The only thing I need to see is a market structure shift for this particular day, which is today. So for me to be able to see that market structure shift, isn't prices already reacting on my point of interest, which is an H1OB. So now I'm looking for my setup formation or confluences to show me that price will actually buy based on the bias I have. So on M15, before I go to a smaller time frame, on M15, I want to show you how price came. This is London session, this is New York, right? So I had this order block just as a point of interest as well. So New York open price came down. In my mind, I actually thought they would potentially extend the London lows and just come tap the 200 EMA. So sometimes this happens. You'll find out that price will actually come to the 200 and tap it as a stop hunt, then they'll push the other way. Sometimes they won't, like today, the stop hunt was just in London and they did not take out those London lows. So to avoid confusion, the only thing you're waiting for, remember, we've got a buying bias. So what I want to see is a structure of price coming down. Then I want to see price break this structure, which will be a market structure shift. That's the whole point of this video. So market structure shift. Soon as we see the market structure shift, we want to locate anything to use on this side here. Then we wait for price to come back. Soon as we get whatever we want, soon as price reacts, then we execute a buy. That's the only thing we're waiting for today. So price came, created this W. So in terms of smaller time frames, I usually prefer the 3 minutes, but you can also use the 5 minutes. So for this example, I'm going to explain on the 5 minutes and I'll try to show you the 3 minute because the price action is almost the same. So starting at London Open, we have to agree that price was pushing down. So we've got that downtrend coming. Then as London session was going to an end, you can see that's when price started to push up. So this was the first sign of a structure getting broken, structure getting broken. Then we came into New York session, right? So New York session, remember, we've got a buying bias. What we want to see is still a structure to the left get broken, get confluences for us to enter, then actually execute the trade. So if we zoom in again, price came, failed to take out this low. Remember, we've got that order block from M15 from London session. So price came up, came down. Remember now this structure is not broken. So until this structure is broken, we cannot buy. Or personally, I cannot buy because I need confluences. I need my plan to show that it's actually happening for me to execute. So first move to give a market structure was this one. So this was at the stock market open, which was 1630. We had this push up, which simply continued pushing up slightly before we got the first pullback. So for me, that's the market structure shift. So let's see if we can just zoom in again a little bit, because now we have to start looking at each candlestick close. We have to pay attention because that's our entry criteria. So we're looking for a candlestick, a familiar candlestick from your doji, your pin bars, your bullish engulfings, or inside bar if you understand them. We are now reverting back to the candlestick trading Bible. You need to know your candles. So soon as you get the market structure shift, you want to mark what you have to your left. So we had this zone, we had this minor level here as well. Then we had an imbalance right here. This gray zone you see, that's the imbalance I had. So price came down aggressively right into that imbalance. And from there, we got a reaction. So from here, you can enter this trade multiple ways, depending with how you'll be understanding the price action as it unfolds. So the safer entry for me is always after you get the reaction of the imbalance or the reaction of the order block, and you have to wait for a candlestick close, which simply means I would have waited for this price to bounce off. Then price gives me a bullish engulfing. My entry is there. My stop loss is just below that last low. And my TP is 1:3. All right, TP 1:3. Okay, we're going to scroll up a bit. Okay, this makes it so usually 1 to 3 is my average take profit on a trade. Then on indices, if you follow us, I always say after you make your entry, you want to at least catch a clean 100 points. That's what I call a successful trade. So you're going to map up 100 points, which is somewhere here. Okay, so as soon as price get to your 100 points, for me, the trade is successful. Usually that's like a one-to-one, but depending with your risk or how you're entering, it can also give a good reward. But as soon as you hit 100 points, that's one way whereby you can actually enter this trade, right? So you could have entered this trade this way by waiting for price to actually react. But remember, this is the 5 minutes. Sometimes it takes time. If you don't understand this price pattern, you wait for a doji. There's your doji. So now price is in motion, right? We are now creating higher highs, higher lows, higher highs, higher low. So in anticipation of a higher low, now we bring in the moving average. So now we're mixing all the knowledge we know we're adding. So we get a doji right on a moving average. For me, that's an entry criteria. So if you had missed that other entry, you could have taken this one. So soon as that doji closes, you want to enter. So now you can see this particular trade has got a better risk to reward. And based off the first setup, which is targeting 100 points, you can still just adjust this to that and you still get a 1.3. Or you could still aim for Friday's high, which is this, sorry, not Friday's high, for Tuesday's high, which is this green line you see here. So that means your setup will be completing here. Or you can opt to use the 3 minute, which is the time frame I usually use for my entries. So on the 3 minutes, again, you can enter in two ways. An aggressive entry would be when price just taps into your fair value gap, and you can choose to put your stop loss either outside the New York lows. You can put it outside the last low you see, which will be the best option based on my trading strategy. Then you aim for Tuesday's high, or you aim for 100 points. So from this particular entry to 100 points, your 100 points would have been somewhere here. So the main thing, if you've been paying attention, is you need to know your bias. Once you know your bias or where your price is most likely to go to, it becomes a bit easier to look for setups. So as you can see, there's many entry points, many entry criteria as well. So for me, I would have preferred to wait for price, the candlestick to close, right? I want my price to react on the imbalance, like I said. Then I need to wait for price to close. I need a reaction of that imbalance. So as soon as I get that reaction, what I want is to open a trade. My stop loss goes just below that low. I think this is the setup you see, which I actually took. I'll show you guys just now. So 1, 2, 3 should be right here. Slide it there. We took multiple trades here. So the other trade I remember was aiming for 43,400 as a TP, which was somewhere here. I think that's where the 100-point mark is. This is Tuesday's high. These are all areas where you can take your profits. Then from this entry, 100 points would have been just below Tuesday's high, which was somewhere here. All these you take profits or you scale out areas, and it all depends with your entry. So no strategy works by itself. Everything works in forex. You just need to understand what you're looking for. You need to understand what you're doing. You need to understand the timing also, because whatever we're looking for here, we don't just look for it anytime, especially if you're a day trader. You need to understand your timings. So if I was a London trader and I was looking for buys, I don't think I would have taken anything. But because I'm a New York session trader and I only trade New York, or I mostly trade New York, my pattern just presented itself during New York and it played out to the fullest. So I'm going to quickly show you guys the trade as well, because people say seeing is believing. So we're going to jump to number 3. So we take the trades on multiple accounts. So you can see this one, this is where I entered. This stop loss initially was lower, then adjusted as the price moved. 5-minute time frame, you can see 43,400. I think this is where I collapsed this particular trade, closed all positions as well. Then you are going to see, remember we're also doing that equity edge profile. So you see the trade here, and the profit. The clips are not really that perfect, but you can see that's the balance equity, then the running trade on this was the profit. I think we also closed this at about 1.5%, if I'm not mistaken. But yeah, this was the trade, and that was the setup we had today. So the main thing I'll just leave with you guys is plan your trade and trade the plan. Plan was simple. We came to the day, we realized from a higher time frame, we have a market structure shift on its own. We are looking for price to come up. So what am I looking for? I'm looking for price to potentially come towards this area. You can see my point of interest, and it's also near the 800 EMA. So that's where price will most likely get to. If we don't get here today, we might get there tomorrow. This also shows you that, like I said, you need to plan your trade, then trade the plan. So the plan here was to just get a 1 to 3 or get 100 points and call it a day. So we're not waiting for the whole move to play out and being greedy and holding and stressing and all that. We're just going for what we know we can get. We're taking our pips and we're getting out. And also, we just need to consider that it's the festive, it's the holidays. Most traders are not trading. A lot of manipulation in the market as well, and less volume. There's no volume in the market. So you really don't have to trade, but if you see something familiar while as you're backtesting, you can also take your trade. So that was it for today, guys. Uh, that's it for market structure shift. It's mainly abbreviated as MSS, market structure shift plus confluence. So your confluences are just your factors which are making you take the trade. So those are your order blocks, your Fibonacci. I also didn't explain the Fibonacci. You could have also ran the fib or used the fib, right? So from this lowest low, for those who read or who are reading the candlestick trading Bible, you can see this is a huge impulsive move, market structure shift. You run your fib, you drag it into the future. Where do we get a reaction? We get a reaction right on 61.8, which is lining up with the other confluences which we mentioned. And we have a nice bullish engulfing candle. So you can even take your trade here, stop loss here. If you're looking for 1 to 3, 1 2 3, probably 1 to 3 will be somewhere here, which is where price is most likely to get to. So depending with your time frame of entry, like for example, if you enter H1, sometimes you might have to hold, but especially with the festive, also there's no volume, so price may take time to get there. So this would be like a 2 to 3 day trade, which you need to hold. Then again, from this impulsive move to this one here, you can see there was no entry here, which we could have used. The next impulsive move was this one up until this high. So if you drag it into the future, coming up into today's setup, you see that price actually reacted off the what? Of the 50 level, 38.2, 50.0% fib retracement level. And we got pin bars in there, which are all signs for you to enter. So you could still have entered at the close of the first or the second or the third pin bar. Stop loss outside that range. Again, with a 1 to 3 or even aiming for this liquidity here up here, you could have taken profits. But otherwise, you could still have aimed for this and you would still be in the trade. So as long as you know where your price is going, I feel like trading becomes a little bit more simple. So I hope this video helps. We spoke about market structure shift, we spoke about confluences, and I added a quick insight on fibs as well. So for any questions, feel free to drop them in the comment section or DM me on my WhatsApp if you've got my number. And join the community, and let's make 2025 our best year yet. So thank you so much, guys, for joining. Enjoy the rest of your festive holidays. Good trading.